Nebius Group may be one of the most misunderstood AI stocks in the market today. While investors are focused on flashy AI applications and chatbot companies, a quieter battle is taking place behind the scenes. Every AI model, every AI assistant, and every advanced AI application depends on one thing: computing power. And that's exactly where Nebius is trying to build its empire. Think about the AI industry for a moment. Companies like OpenAI, Anthropic, and many others are racing to create larger and more powerful models. Training these models requires massive amounts of computing infrastructure. We're talking about thousands of GPUs running around the clock, enormous data centers, and sophisticated networking systems capable of handling unbelievable workloads. The challenge is that demand for this infrastructure is growing faster than supply. AI companies are competing for access to computing resources, and that has created one of the biggest opportunities in the technology sector. Nebius wants to be one of the companies supplying that infrastructure. This is why investors have become increasingly interested in the company. They see a business operating at the center of one of the fastest-growing industries in the world. Instead of competing directly with AI software developers, Nebius is focused on providing the tools and infrastructure those companies need to succeed. Many analysts believe this strategy could be extremely powerful. Throughout history, some of the biggest winners during technological revolutions were not always the companies creating the end products. Sometimes the biggest winners were the businesses supplying the critical infrastructure that everyone else depended on. During the internet boom, companies that provided networking equipment, servers, and other essential infrastructure became major beneficiaries of industry growth. During the cloud computing revolution, infrastructure providers generated billions of dollars in value. Today, many investors believe AI infrastructure could follow a similar path. Nebius has been investing heavily to capture this opportunity. The company continues expanding its data center capabilities and increasing its access to advanced computing resources. These investments are designed to position Nebius as a key player in the growing AI ecosystem. However, this growth story comes with significant challenges. Building AI infrastructure is not cheap. In fact, it is one of the most capital-intensive businesses in the technology sector. Data centers cost enormous amounts of money to build and operate. High-performance GPUs are expensive. Networking equipment requires constant upgrades. Electricity costs can be substantial. As a result, companies pursuing aggressive expansion often need access to large amounts of capital. Investors must understand that rapid growth frequently comes with increased spending. While those investments may generate future returns, they can also create financial pressure in the short term. Another important factor is competition. The AI infrastructure market is attracting attention from some of the biggest companies in the world. Major technology firms are investing billions of dollars into AI-related projects. New startups are entering the market every month. Competition for customers is becoming increasingly intense. Despite these challenges, Nebius may have certain advantages. The company has developed relationships within the AI ecosystem and continues to expand its infrastructure offerings. If management can execute effectively, those advantages could help support long-term growth. One reason investors remain optimistic is the size of the overall market opportunity. Artificial intelligence is still in its early stages. Businesses across healthcare, finance, manufacturing, education, and countless other industries are exploring AI adoption. As adoption grows, demand for computing power could increase dramatically. Imagine thousands of companies building AI-powered products.